Welcome back to Dinar Daily, your trusted source for tracking the latest developments in international currency markets, particularly focusing on the Iraqi Dinar IQD and the Vietnamese Dong VND. For years, speculation around these two currencies has filled forums, financial newsletters, and heated debates across online and offline investment circles. Yet, what we are witnessing today feels categorically different. Reports surfacing across multiple financial channels suggest a moment of unusual significance, an inflection point that may transcend the usual chatter and speculation. Unlike the weekly humdrum of economic updates and forecasts, this convergence of signals appears sharper, more unified, and deeply resonant. It is as though the quiet undercurrents of financial movement have gathered into a visible tide. For long-time observers, this shift in tone represents more than rumor. It hints at systemic changes, potentially altering not only exchange rates but also the financial destinies of individuals, institutions, and even nations. For newcomers just discovering these markets, the timing could not be more consequential. The convergence of signals. Financial markets often move incrementally. Stocks rise and fall by fractions of a percent, currencies fluctuate within narrow bands, and global institutions typically project stability above all else. But occasionally, rare moments emerge when scattered reports begin aligning into a coherent narrative. That is the landscape surrounding the IQD and VND today. Sources from different regions, many historically unconnected to speculative rumor mills, are now reporting signs of preparation within respected financial institutions. Unlike previous waves of vague commentary, this current stream of updates carries specificity. It is not just that something might happen, it is that large systems are actively preparing for a revaluation event. Why this time feels different? Past cycles of speculation have often been easy to dismiss. Investors grew accustomed to recycled optimism and unsubstantiated intel that rarely bore fruit. But now, insiders describe system upgrades, back-end banking adjustments, and technical testing that appear consistent across continents. This coordinated behavior compels attention in ways earlier chatter did not. For seasoned market watchers, the shift is palpable. The usual vagueness is absent. Instead, there is logistical preparation, software upgrades, security reinforcements, liquidity management, all pointing towards something imminent. Historical skepticism. The idea of a major revaluation (RV) of the dinar or dong has long been controversial. Since the early 2000s, after Iraq's currency collapsed in the wake of war, countless rumors circulated about an eventual dramatic rebound. Some investors clung to this narrative, while skeptics mocked it as nothing more than wishful thinking. Vietnam's dong has had a quieter story. Once pegged and tightly controlled, it has gradually been managed through state-driven reforms. While Vietnam's economic rise is undeniable, many analysts dismissed talk of a sudden currency leap as unrealistic. The current climate. What differentiates today from the past is the alignment of credible, independent reports. Sources from different geographies and institutional backgrounds are telling a consistent story, near-term readiness, not distant possibility. For the first time in years, the narrative carries urgency, suggesting that a potential adjustment could occur not in some future window but in the immediate horizon. Banking systems on alert. Multiple reports describe financial institutions undertaking measures that go beyond routine maintenance. Core banking platforms are undergoing stress testing. Security firewalls are being reinforced in anticipation of higher transaction volumes. Customer service teams are reportedly on standby to handle surges in inquiries. These are not the hallmarks of rumor, they are the visible footprints of preparation. Trading desks that typically scoff at RV chatter are reportedly modeling scenarios for unusually high activity. Global financial networks, known for moving cautiously and independently, appear unusually synchronized. The significance of synchronization. When diverse institutions, across continents, align their systems simultaneously, it suggests planning at the highest levels. Unlike speculative retail investors, banks do not prepare for hypothetical rumors. They prepare when instructions or signals from trusted authorities direct them to be ready. This is why analysts now take notice. The convergence of action across the system implies coordination, potentially at the level of central banks and international regulators. Iraqi dinar projections. Behind closed doors, insiders whisper of rates ranging from the low single digits to as high as $40 per dinar. While such figures sound extreme, the clustering of estimates within narrow bands is unusual. This indicates that insiders may be basing their numbers on actual modeling scenarios, not pure speculation. Even at the lower end, say, 2-3 per IQD, the implications for holders are staggering. Someone with 1 million dinar could be looking at millions of US dollars in equivalent value. Vietnamese dong projections. The dong's potential revaluation numbers are less dramatic but equally significant. Estimates range from a fraction of a dollar to parity with the US dollar. Vietnam's rapid industrial rise, surging foreign investment, and trade agreements lend plausibility to such projections. Again, even a modest adjustment would transform the financial landscape for holders. A revaluation to even 25 cents would multiply holdings several times over. Iraq, oil wealth and monetary reform. Iraq's economy is anchored in vast oil reserves, among the largest in the world. Decades of conflict, sanctions, and governance issues eroded its financial stability, leaving the dinar undervalued. Yet recent reforms tell a different story. Central bank modernization. Iraq has introduced international compliance standards, anti-money laundering measures, and stronger oversight. Reserve accumulation. Billions in foreign reserves and gold acquisitions have strengthened the monetary base. Investment climate. Iraq is actively courting global investors, particularly in energy, infrastructure, and finance. These measures lay a foundation that could justify a stronger currency reflective of the country's true economic potential. Vietnam, from agriculture to manufacturing hub. Vietnam's story is equally striking. In just 3 decades, it transformed from a war-torn agrarian society into a dynamic manufacturing powerhouse. Key drivers include, foreign direct investment (FDI), billions flow annually, with companies like Samsung, Intel, and Nike making Vietnam central to their supply chains. Trade agreements. Membership in CPTPP, EFTA, and regional PACs has expanded market access. GDP growth, averaging over 6% annually for more than a decade, Vietnam outpaces many of its peers. Vietnam's dong remains artificially suppressed to maintain export competitiveness. But as its economy matures, global pressure for currency realignment increases. Toward a monetary reset, some analysts suggest that the revaluation of IQD and VND could be part of a larger systemic shift. For decades, global finance has revolved around the US dollar, euro, yen, and pound. Emerging economies often found their currencies undervalued, limiting their global influence. A revaluation of the dinar and dong could signal a rebalancing, where undervalued nations gain stronger financial representation. This would not just impact Iraq and Vietnam but could ripple across Africa, Asia, and Latin America. Evidence of coordination. Reports point to synchronized banking software updates, Treasury Department alignments, and intergovernmental coordination. These are not minor patches, they resemble the groundwork for a systemic event. If true, the IQD and VND adjustments may represent only the first wave of a broader global currency recalibration. Steps to take now. For those holding these currencies, preparation is essential. Verify authenticity, ensure notes are genuine, using UV light, watermarks, or professional appraisal. Check condition, banks may reject damaged or marked notes. Organized documentation, receipts, certificates, and transaction records strengthen legitimacy. Engage banks early, understand their exchange protocols, limits, and fees. Avoid unofficial brokers, only transact with licensed institutions. Guarding against scams. Historic financial shifts attract opportunists. Fraudulent websites, phishing emails, and fake exchange offers will inevitably appear. Remember, if it sounds too good to be true, it is. Protect personal data, consult trusted professionals before making moves. For Iraq, a revalued dinar would elevate Iraq's global financial standing, increasing its purchasing power, enabling greater credit access, and strengthening trade leverage. It would also incentivize foreign capital inflows into oil, infrastructure, and banking sectors. For Vietnam, a stronger dong would validate decades of growth. It would reduce dependence on undervaluation strategies, encourage domestic consumption, and solidify Vietnam's role as a regional leader. For the world, if these revaluations materialize, global trade balances will shift. Developed nations will need to reassess imports, debt strategies, and currency reserves. Emerging nations may feel emboldened.